the world needs more energy. The transition to all electric and ESG and EV, it's not working fast enough. Nuclear is not coming online quick enough. Renewables aren't working. So we need old energy. That's one. Two, we're in a positive period of energy seasonality now through the summertime. Three, energy stocks are cheap and they're growing cash flow. They got clean balance sheets and they're great diversifiers for tech. They and mid caps are leading year to date. When tech goes down, energy often will go up. So it's a wonderful diversity. Energy are the new bonds. Why I don't know why people own bonds, because of inflation and rates going higher.
Energy's the new bonds. It's a new 60-40.
This episode of Trends with Friends is brought to you by Freck. I believe in this product so much that I moved most of my passive stock market investing assets over. If you are like most of us and invest in ETFs, you should know that there is a better way that lets you invest in an index like the S&P 500 while saving thousands on your taxes. It's called Freck Direct Indexing and takes zero additional effort. Just as easy as investing in an ETF, Freck Direct Indexing can help you earn more by unlocking tax savings through tax loss harvesting. Direct indexing has been around for decades, but only through wealth advisors at high fees and high minimums. Technological innovation has changed that and made it available directly to investors like yourself. Direct indexing is now growing faster than mutual funds and ETFs. Join the thousands switching to get more bang for your buck. Visit freck.com. That's FREC.com to get started. Good morning, Trumpsters. All-time high, Donald J. Trump. We're here in Trends with Friends. I can't believe I'm actually saying those words out loud. Last time there was a DJT ticker symbol. It was on its way to zero. Donald Trump casinos back in the early 2000s. You guys probably weren't born. Well, Phil, you were definitely born. Rome was in his formative years and the Cuban Missile Crisis. By the way, Cuban Missile Crisis, not so good anymore for you, JC. I think you have 3 young Cuban missiles, but I got to work on the nickname for JC. I'm not feeling it. So welcome, JC.
Dude, they just opened up. They just opened
band.
up a batting cages across the street. What do you think about that?
That's good.
I got 2 Cuban baseball players in my house. I'm going to show up with 2 1-year-olds.
Refresh me on the names. Felicio, Giopetti. What are the 2 names?
Leonardo and Fibonacci.
They're Cuban. They're not Italian. No.
Leonardo and Fibonacci. That's what I named. Look at this. I named my tooth Leonardo.
Can you imagine if my wife would have let me name him that? I actually would have.
Oh, by the way,
Fibonacci. I respect that. Middle name for sure.
My dentist says my name is Havad for $900. Can't get my name right. And Phil Perlman, welcome. Phil, JC, regulars, obviously on Trends with Friends, and a semi-regular, Ram Alopecia. How do you pronounce your last name?
Alalia.
Exactly. So Ram is joining us today from his home. He's I think Jim and JC bring up the smartness on this show, so we're going to let them do most of the talking today. Phil is in charge. Phil is our moderator and voted the only guy worthy of moderating this show. So Phil, take it away today. We've got a lot going on.
Okay, so Ram, always great to have you, brother. And we're going to have a couple of comments. We're going to talk about Apple. And it's always, so the thing I love about having Ram on the program is we get like a deep analysis and then we get JC with the chart analysis. And there's 2 beautiful areas of overlap with you guys today. One is Apple and the other is energy and the commodities, where you bring both perspectives. It's like, multiple analyses. It's beautiful. So we're going to get to that. Howard, DJT started trading today. Last minute you come in and you're like, okay, we got to talk about this DJT. It's up like 20%. on its first day of trading or something like that. So, it's not my favorite topic, but what do you got there?
Well, I think it's important to talk about Reddit came public and Ron will know this too, came public not as much fanfare as I would have thought. As the CEO of StockTwits, I thought I had reached out to the company a couple times in their communications team about doing some live stuff. They kept it very calm, and I think part of it was because they're kind of being held hostage by their moderators, right? The moderators that kind of run the site are not happy about the IPO. I don't think they don't even want shares. So I think it's just the perfect IPO. God bless all those involved for the time of the world that we're in. And I think there's a lot of cross currents here, and it'll get to the Trump thing and how it appears. First things first, they raised it at $10 billion valuation years ago. And even with this huge run up post IPO, they're still underneath where the last VCs came in. Okay. Second thing is, I think when you zoom back, and Ron will chime in here, when you zoom back and go, Reddit, I think a much bigger site than Twitter. I think much more signal in 2024 than Twitter has. Even for all the wrong signal, there's just so much more signal there and so many more topics for users that it kind of explains why Musk has pivoted away from text towards crazy talk and towards video and long form podcasting, because he's to get his 44 billion out in a world where Reddit's only worth 10 billion, he has to become TikTok. Most companies, most companies can't just make a cold hard pivot from being a $10 or $20 billion company, and Twitter's had to make that. So Reddit's making Twitter and TikTok are making Twitter do something that they aren't. And then sliding into third is DJT, that despite not even trying, I don't think Trump had any sort of master plan, has built or is part of a $5 billion social media site called True Social that somehow, with all the manifestations of Trump, has got itself public now and approved and trading on the NASDAQ at a $5-ish billion company, and Trump's share is enough to get him out of trouble. So it's fascinating to me. If you can't talk about this in terms of like fear, greed, price, fundamentals, lack thereof, timing with the political world and his fines that are due, I didn't want to be talking about this, but I think it's fascinating. So I'll open that up quickly and then we'll move on. Ram, anything to say here? And I know you probably weren't prepared.
Yeah, no. So Reddit, it's up 50% from its opening IPO. IPOs we saw come out last September. By and large, most of them were duds, although ARM had really taken off after a few months. So I think this is a sign of animal spirits are back. There's an ETF called IPO. IPO is at an all-time high. Goldman Sachs is doing well. Goldman Sachs is a lead tech M&A banker. That stock is doing well. So what's happening is the markets are looking ahead and saying, hey, IPOs are going to come back. And it's exciting. Reddit had single-digit user growth for quite a long time. And then a few quarters ago, they started having double-digit user growth. And the VCs were smart. This is my speculating now. Everything else I just said was a fact. My speculation, they said, is, hey, time to go hit the sell button and go. And that's what they're doing here. I'm not an IPO guy. By and large, I'm skeptical of companies that go to public markets that are VC backed. Now and then you find great ideas there, but it's just not my thing. I'd rather wait for the mania to settle and look for higher quality business.
Yeah, I put the IPO chart up there. It's making new 52-week highs, not all-time highs. Still got a ways to go. Okay, there you go. Yeah, it's close.
So it's Trump. Look, Trump. What's really funny about Trump, right? You guys are seeing the meme coin mania. There's a Trump token. What's the difference between Trump DJT and Trump meme coin? One is SEC registered, I suppose. Yeah. Does that distinction make a difference?
I think you nailed it, Ram. I think you nailed it. I think the whole Truth Social Trump thing is the ultimate meme. A community, a particular group that have certain beliefs wanted this to happen and literally made it happen. Isn't that the definition of a meme token? This one's just publicly traded. It's the same shit, right?
Right. This is Wall Street Bets 2.0. It's creating a community around, meaning like AMC games. These are like communities around these things. DJT is another community. Yeah. Reddit literally is a community where Wall Street Bets was birthed.
Yeah. The same way Bitcoin's a community, it's just a bigger community and a more valuable community. This is just a smaller, less valuable, but I mean, shit, still several billion. That's not nothing. You know, what, Pepe tokens, 4 billion? You know, you've got the dog with hat, just hit 3 billion in market capitalization, making a new high. What's the difference? It's all the same thing.
It's signs of where we are in the cycle. Bullish vibes, first of all. Speculative vibes. Bullish vibes, speculative vibes, right? So don't hate it. Take advantage.
I definitely don't hate it.
Don't chase it.
You can hate the players, not the game. There's a lot of undercurrents between the meme coin. There's a lot of difference between the meme coin and the stock. The stock, well, you're calling it a meme stock, is not trading on fundamentals. That's fine. But behind the stock are people that have influence, including the venture capitalists that are TikTok investors. So there's a lot of gamesmanship and political gamesmanship behind the scenes. And that's a lot different than the Donald Trump meme coin. So I'm saying there is a lot.
Right, look, there's a lot of. Also.
Yeah. Anyways, okay. So we covered it.
It's like the
God bless.
Oh, well, one last thought on this. So it reminds me of like the .com era. When I was in college, my friends and I, we barely had any cash, but we would day trade. Learned a lot of lessons from that. But what we would do is IPO flipping. And so I'm sure we all know what that means here. But you'd buy the stock immediately in the IPO. It would jump up a bunch, and then you would sell. So you remember like GeoCities, Howie? You remember GeoCities?
I do. Yeah, of course. Yeah, it's Fred Wilson.
So I saw Reddit like up 50%. Kind of reminds. So GeoCities like now defunct. Like it was like a build your own homepage kind of thing. When the bankers took it public, someone asked the banker, like, "What does the business do?" They didn't know. Like that literally happened. So things were far more crazier then and now. But I think we're seeing more of that come back. And when you start to see those IPOs not pump on the day of announcement. So I remember Handspring. So I bought Handspring and it dropped the day of the IPO. I said, wait a minute, this thing's not working anymore. So those are the things, those are the cues you want to look for when the animal spirits start to deflate.
And I want to just show the chart of the blue chip meme coins also like really participating throughout March, because like this Trump SPAC, you know, coming through, the dog with hat at 3 billion. All of this is happening simultaneously all throughout March. Look at the Doge and the Shiba. For those keeping score at home, Dogecoin's worth $26 billion. Shiba's worth $17.5 billion. So when you're talking about Trump at a few billion, and then you got the Pepe at 4, that's nothing. These things are monsters. So just keep in mind how massive this has gotten. You know, the
thing I love about it is that all the old people are looking at this completely bewildered, as if it's like, how could this be happening? Just complete zero understanding of what's occurring right now, even though the market caps are real and the price movements are real. Whether those are enduring or whether this is just a short-term thing and we're going to, these assets will eventually crash, doesn't really matter.
Well, they'll crash at some point.
Yeah, so what?
They're going to crash. Let me just walk you through just a tip out to Gurley. Again, I'm not a Gurley fan, but Gurley and Gerstner had a pod that I was randomly listening to yesterday, and it started out about RSUs, which is deep topic, not for this show, but they had the CFO from Priceline on from 1999, and then people won't remember this, but because I had forgotten. But in 1999, Priceline started and came public the next year. Okay, so within 1 year of starting, went public. And went straight to 35 billion. Came public at $1 billion, JC, and went straight to 35 billion. And then straight back down to less than $1 billion in 2000. Okay. So meme coins, as funny as they are not Priceline. Now, maybe there's a business model that gets developed. And Priceline wasn't Priceline at the time, right? Priceline had to go and execute amidst the carnage and go from, like I said, a 1-year-old public company. So the banks have been replaced by maybe Solana and social networks, Rom. Like there's something like fundamentally interesting, and a global marketplace that, if you use Dex Screener or something else where you can bid up the stock and use Twitter and Reddit.
Is to
right. So
put tokens on chain. But by the way, some of the meme coins do have business models.
Okay, so let's talk about
some of them have
Apple.
business models.
Let's get in. Let's go. Let's go to Apple.
Sorry.
Okay, no, that's fine. The whole thing's insane, but it's also glorious and wonderful. Apple. So
what's insane about
here's the thing. Well, the universe is insane. Life is insane. Life is crazy. Like, what's the meaning? Blah, blah, blah. But let's get on with Apple, because we have JC and Ram here. Amazing perspective for us to have from a understanding point of view and from a price behavior point of view. So JC, I'd like to start with you and just talk, let's put this Apple chart up, the Apple versus SPY, and just like, where are we now in terms of price and time?
Yeah, 180 was the big level. We were talking about shorting in here. Ram was pretty bearish. You want to buy strength. This is like the opposite of Howard Lindzen. Howard Lindzen likes to buy strength. He likes to buy leaders. Like Howard has shown me so many charts over the years of a stock making new highs, going up. Like that's what he likes. This is the opposite of that, right? This is making new relative lows every day. While the Nasdaq's making new highs. When was the last time that the NASDAQ 100 and Apple were moving the exact opposite directions? Like that's not really something that we're used to. So just another classic example of how 2024 is not 2023. It is very different. The leadership groups are in energy and material and chemicals, and it's not Apple and Tesla and Amazon, and Google, like those companies. A lot of these things have been underperforming for quite some time, but Apple's really the worst. I guess Tesla's pretty bad too, but Apple's really been a bad one on the technology side. And I think it's vulnerable. Obviously, our trade is working. You guys know me for a long time. We like to do more of the things that are working and less of the things that are not working. And taking advantage of downside in Apple continues to work. And listen, the relative strength peaked a while ago. So this had already been rolling over. So if relative strength continues to roll over, then I think price itself is going to continue to follow that. And man, if we start losing these former lows in Apple, I think there's a lot of downside. So the buyers need to come now. If those lows from October don't hold, there's a lot of downside. Think about how bad this stock has done with the market going up. So imagine if the market doesn't go up. How's Apple doing?
Does the NASDAQ need Apple anymore?
Of course, it's a big component, which is why the NASDAQ's underperforming, right? The winners are the Dow Jones Industrial Average, and to a certain extent more so the S&P 500 or the New York Stock Exchange Composite, that's driven a lot more by cyclicals and industrials. The NASDAQ 100 has no industrials, no materials, no financials, no energy, nothing, none of those things. So if those things are winning, then the Nasdaq's going to underperform. Look at Europe. Why do you think Europe's doing so well? There's no technology over there. The German DAX is one tech stock, right? Those are being driven by industrials and other cyclical areas that the Nasdaq simply does not have. It doesn't make one index better than the other. I think it's important for investors just to understand what these indexes represent, what's in them.
Ram.
I would tweak that a little bit. So first off, just doubling back to Apple, and we should talk about leadership rotation, what JC touched on. It's a really crucial point. People are not talking about that. So on Apple and Tesla, we've been bearish. So the last show, I think Apple was at near all-time high, and Philly said, would you short that? I went, yeah, hell yeah, I'd short that thing. And it's worked out beautifully, and same with Tesla. Apple's going to get re-rated into consumer stable, and that's what it is, because it doesn't have earnings growth. And now you've got Europe going after Apple, which they should, because they got a 30% take rate and adding competitive behavior. They're copying and pasting startup IP technology. And a lot of other big tech firms like Amazon do this as well, by the way. So, I wouldn't try to short it here. Like at that level, it's due for a bounce. But JC's right. Like if they don't bounce now, then you're going to have issues.
Now or never.
I don't have a position in it now either. Like there's no edge here is the way I look at it. And by the way, I think the 4P is somewhere around 26. It's on the higher end of a reasonable valuation now. So When prices drop, I actually get less bearish from a valuation perspective. Technicals are a different consideration. And when things move up, well, momentum matters, but things get more expensive. So on QQQ, look, we had all-time highs 2 days ago. What's interesting is like NVIDIA's carrying the load, Meta's carrying the load, Google's just 2% off its all-time high. So on the surface, you're seeing these indices march higher, but underneath the surface, it's like a duck paddling water. There's actually a lot of churn. There are multiple bear markets taking place. The EV sector is in a bear market. The ESGs, processed foods, the First Solars of the world, those are in bear markets. Obviously semis are in bull markets and the AI theme and so forth. So it's been this beautiful leadership rotation that has kept indices moving higher. People are passing the baton to the next sector. Like energy is playing that role right now. NVIDIA has been taking a breather the last few days, and others are performing. Equal weight's starting to perform, for example.
Yeah,
particularly, I'm glad that you brought that up, Ron, because the equal weight. Why is it starting to perform? Because the equal weight is also driven a lot more by cyclicals. Those mega cap technology stocks have much lower weightings in the equally weighted indexes. Same story.
Exactly. It's the cyclicals that are performing here. You're also seeing small caps do very well today, last few weeks, as well as starting areas of small caps. Like I call them the good small caps are the earnings growth. That's the key thing. People lump small caps into a bucket, and you really can't, because they consist of small cap value banks, some of which have issues, some of which don't. They include biotech firms, which are really lottery tickets. They have industrials, and then they got elective health. They've got nursing homes, two categories I like. So there's a whole range of securities within small caps. And the ones that are quality small caps that are delivering earnings growth, we bought Harrow last week after earnings, up like 15% since then. They provide analgesics to ophthalmologists. So instead of getting literally a needle in your eyeball when you have a cataract surgery, you get 3 drops. And that's been doing well. And it's 180 million revenue, growing 40% revenue.
One thing that you see here is that Apple, for all the technicals, the news finally broke, right? This lawsuit from the U.S. government didn't happen in 2 days. The overhang of this news has been leaked for a year. Apple's not going anywhere, right? The lawsuit is smart and stupid all in one lawsuit, right? Like if you don't like Apple, you can move to the Android. Apple created this market. So, charging 30, people arguing about whether they should take 30% in a market they actually created from thin air is silly. I think the most interesting thing here is how much ill will Apple has created for themselves, despite creating the whole category. So that just goes to show you no one likes the big dog. And this is Apple's turn to just be under the microscope at every step it turns. And that showed up in the technicals, which showed up in the relative strength, which is what we're all really talking about, is this combination of fundamentals and technicals piling up on Apple. And as luck would have it in America, the way America works, at least it continues to work for now, is that other companies are stepping in to fill the void. And what Ram said that's super interesting is it's a really interesting market because even cloud stocks are weak, but certain cloud stocks are very strong. Like, Axon is one that I've talked about forever here, which owns its own cloud in the police category, right? And Oracle, the king of cloud, continues to chug along. So it's not just picking a category anymore, although energy just seems to me like a blanket win here because it's so underfollowed and underloved, which we'll get to. But with tech, it's so overfollowed and so overloved that it's much harder to pick winners. And there will be winners because the category is just so massive and involved in our daily life. But, it's just harder to pick tech winners. And that's probably why, to Ram's point, like the Qs are going up, but the churn underneath is massive because it's a law of large numbers. Look at the valuation. And I would say this is playing out in the seed market too, right? I sat aside for 3 years at Social Leverage because we were priced out of the market. Y Combinator was pricing startups at $20 to $30 million pre-product. But if you go read the racist Paul Graham's piece about Reddit came into Y Combinator and they wanted to do a phone ordering business, and he turned down Reddit. Even though he loved Alexis and the other guy, he turned them down because, he thought they had the wrong idea. So some of the best ideas didn't even start. So we're back to that era where small is going to be beautiful, right? Like, it doesn't matter who's president because it's going to be bad either way, in my opinion, right? Like, I can't measure the magnitude, but when you have horrific candidates, we're going to have a bad president. And so, barring something crazy, our lot has been cast. We are going to have a really bad political environment. And yet the market's going up. Why? And I think it's because people are small is going to be back. Americans realize this. The stock market's sensing it. Goldman Sachs breaking to all-time highs at the same time as meme coins are breaking to all-time highs. These are like weirdly bullish things that despite Apple dropping and despite terrible candidates, there is a lot of good happening. I can't explain it because you want to be in a bad mood. Yeah. If you open up Twitter, you turn on the news, your first reaction is the world's coming to an end, including the fact that Elon Musk said in a tweet that if the Republicans don't have a sweep, the world's coming to an end. This is a guy who says he's not, a Republican, but says if Republicans don't win, the world's coming to an end. So in that environment, to see small caps, the things that you don't expect to see work, I think that's the biggest takeaway that I'm seeing. And I'm very happy because small ideas are what we like. We like these kernel ideas that wedge in and can become big ideas. And so I think fundamentally—
a lot of money with small.
Yeah. So I think fundamentally we're in a really good spot. All right. Sorry, Phil.
Yeah, no, two quick points just to riff off what you're saying. So look, the valuations for tech stocks were at the 95th percentile at the beginning of the year. No surprise are lagging. By the way, in January of last year, in 23, healthcare was at the 95th percentile and it lagged and didn't do much for the rest of the year. So what's happening is this. You got the wall of money trying to find a way into the market, and they look at tech and they say, gee, do I want to be the last money in on an expensive stock here, including Microsoft, which has been lagging. And they're trying to find sources of value. And they're looking around and they look at energy. Energy is a 3% weight in S&P. These are good businesses with clean balance sheets, good earnings yield. And we need more energy than we thought we needed because energy transition is going slower than we expected. So that's doing well. And they're looking at quality companies, I would say. Like, the market is discriminating. It's not overall small caps. Like, I wouldn't buy the IWM, for example. This is a stock picker's market for sure. This is a best and the rest market. And one of the things we do at Lumina is we look at the factors that are working. The factors that are working are momentum. So stocks that have worked continue to work. Stocks above their 200-day moving average continue to perform. Stocks that are below their 200-day moving average continue to get slammed, including ones that are just like, look at Warner Brothers Discovery. This thing is like dirt cheap. It's like trading at 3 times price of cash flow. It keeps getting slammed. It's a momentum market and it's a quality market. And good businesses are getting re-rated higher, like FICO, for example. And it's expensive. These are Palo Alto Network, cybersecurity. These are consensus themes and they are getting bid up higher. So it's getting harder to find good entries. You really got to get creative. And there's room to get creative in these. Look at that. Look, WBD. The price to cash flow on this thing, I was looking at this morning. There's a journal article came out about all these streaming services like Roku, WBD, Paramount, and competition. And they're all just in this deep bear market. You're going to see more M&A take place. I imagine Netflix will buy one of these. And that they are
in such a good position, Netflix. Netflix is in such a good position. And if you look at their stock, these charts explain why Netflix is in a good position without even trying. Remember again, we didn't want to talk about this, Phil, or we weren't planning on this, but quickly. If we look at a chart of Netflix, they haven't even tried in the last years. Remember the stock went to 200 because Ackman liked it and went straight down $400. Oh, and Netflix, they're overpaying to make content. They'll never have to pay based on the price charts of all the content companies, right? They may walk into owning everything just with their stock price and the fact that they have scale in streaming.
I'm not a huge Netflix fan. Look, I'm not a huge fan of many stocks, first of all. So you're going to hear that a lot from me. It's got momentum, check. The password sharing restriction is working. That created another squirt of revenue growth. Their marginal customers international now. And when you see that happen, look at Nike. They got slammed on earnings. Marginal customers, China. Same thing with Apple. And Netflix is there too. So that password sharing tactic will keep working for a bit. But look at the forward PE is 36. It's 2 turns shy of Nvidia. Why wouldn't I own Nvidia instead?
Oh, I'm not questioning that you should.
Like Snowflake.
I'm not saying you should go buy Netflix. I'm saying it's misunderstood and sneaky here. It's holding up. It's picking up for Apple here in the sense that other, if you're talking about ads, Snapchat, Facebook, international is a bad word. If you're talking about culture and entertainment, whether it's Bollywood or China has its own Hollywood, entertainment's a lot different than text messaging. And Netflix has much more pricing power, even internationally, because we're so used to saying, oh, Snapchat can't monetize or TikTok can't monetize in non-US countries. And there's some truth to that. Okay. But there's no truth proven that international markets won't pay, whether you're Spain or Italy, for Netflix entertainment. So again, I agree with you on that. But what's amazing about what you said about Warner's is that Netflix is the big beneficiary of all these drops because this is their content eventually that they could buy.
Yeah, Netflix could do well. I'm not saying it won't do. It's got momentum. It's got the right characteristics. It's just, I don't know, I'd put it in a hold if I own it, but I wouldn't be running out to go buy it anytime soon. They will run into limits of growth maybe in the next 2 years. I don't know when. In the same way Apple did. But Netflix, their growth rates are declining over time. They are seeing multiple compression as that growth rate declines. So, they're like a 55-year-old and they're looking at retirement soon. And retirement means they go from growth to value.
Could you just talk that? You know what? I actually had that as a question for you, Ram. You had a great discussion the other day on Twitter about this transition from growth to value, the pain involved there. My question really is, if you could say something about that, but my question is, can Cook navigate that? Or will pressure begin to build on him and an exit, especially if JC's chart, if that relative chart breaks down from that line in the sand that we were looking at before?
I don't think it'll actually break down, by the way. But again, I don't know, 55, 50, 60% probability, which is a lot in markets. But no, they can't grow. Look, they've got a lower bound because they're going to buy back their stock too. They are a cash cow. They throw off a shit ton of cash and they'll create a buffer. People still widely held. People rebalance into it. So I think it's going to be like range bound for a bit, but Apple needs another planet to grow into. Unfortunately, we've only got Earth. There's no other market. Tim Cook was in China yesterday with a prominent celebrity trying to gin up Vision Pro sales. By the way, Apple is subject to product market fit too, just like every startup is, right? Remember when the Zune came out from Microsoft? That was a dud. Remember the Google Hangouts? That was a dud. And Vision Pro, I think, is going to be a dud. We're seeing returns happen already. I put on my Peter Lynch hat, went to the Grand Central Apple store, genuinely I buy like Gen 1 products. I don't want to buy this thing. It's bulky. It's heavy. I can't even play with it. They have a curated shopping experience to trigger my dopamine.
It's a dog.
So Vision Pro is Apple's Zune. That is just harsh. Let's move on let's talk about AI. We got both of you guys together, JC and Ram. From my point of view, we're seeing a spreading out of the large tech companies that can garner this AI stamp. We saw it with Oracle a week and a half ago. We saw it with Micron last week. Maybe we throw that Micron chart up. JC, you say a little bit about the price action here and the all-time high, and then Ram comes in.
I mean, this is just such a huge base. A guy like me, I mean, how long have you guys known me? I mean, this is a monster, potentially. I mean, we've been eyeing this forever. You know what we were saying? You set your alerts above 100. Like that was kind of like the rule of thumb. Kind of like for you guys, if you want to be notified when it's time to start looking at Micron, put your alert at 100. If we're above 100, your computer's going to go off and it's going to give you a heads up that this thing's making a new all-time high. If we're above 100, you can own this thing all day long. I mean, there's no reason not to own it. I mean, that's the level. It's very, very clean. We've seen breakouts like this before. I think it's got 60% upside.
Quickly here, just before you go. Okay, I pinged Michael Parekh yesterday about this, and Michael's been on the show, and Michael's our AI go-to outside of Ram from Fundamentals. Here's what Mike said to me when I asked about MU. They indeed are an AI play because the AI infrastructure needs exponential amounts of memory, especially the expensive super fast memory. But memory semi companies can be a lot more cyclical than NVIDIA. That's a really important point, given they are pure hardware play. He's going to elaborate on the show in a week or two. For now, Micron and others have big AI tailwinds, at least for a couple of quarters. So remember, Micron's still going to be Micron. And so I'm not saying anything that JC said. I'm totally with JC. I bought some stock this morning just to trade. You cannot deny that breakout, much like gold or whatever. But understand that Micron is a hardware company. It's still at its core. But the AI tailwind is there. And so you think you're going to have to trade it a little differently than just a pure play AI growth stock. So that was just, I thought Michael chiming in there was helpful. Go ahead.
Yeah.
Ram.
Yeah, no, semiconductor is a theme, we've been all over. It's a double-digit weight in our portfolio. So we know Micron very well. So a few things, right? Semiconductors overall are cyclical, except the ones that are GPU linked, which is where I want to focus. Micron is cyclical as well. Micron is one of 3 players that provides hardware-based memory. It's called HBM. I wrote about this on Twitter last week after the Jensen breakdown. I have a video there. It's pinned. Take a look at that. We talked about HBM 2 days before Micron released earnings. Obviously, Micron up like 15, 17% after earnings. Here's HBM. So HBM enables you to put memory right next to the GPU. So there's low latency. And that information travels at the speed of light and allows GPUs to perform faster. So you're not waiting 10 seconds for ChatGPT to give a response. Micron sold out their memory for all of 2024. It's done. It's sold out. And they're already taking bookings for 25. Okay. So that's Micron. It's highly cyclical though. So I think it'll do well this year, but the question is, a lot of semis will do well this year. So where do you want to position in semis? By the way, Samsung also does hardware-based memory. The CEO met with Mark Zuckerberg in South Korea 1 or 2 weeks ago. Samsung's a lot cheaper than Micron, 4 PE, 16.4. The best HBM provider is none of these two, actually. Unfortunately, it's hard to buy. There's no ADR. It's in South Korea. So that's actually I'll put the link in the notes somewhere. I don't know if I can pronounce it well, but they're the leading HBM provider. And these are highly cyclical. This is more of a trade than a long-term investment is a way to think about it.
Hey, JC, what do you think about the cyclicality of it relative to the price chart that you're looking at?
Yeah, it's funny because I have this conversation with Straza all the time, who's our director of research, and he likes to talk about semiconductors as being more cyclical. So they have a more cyclical nature to them than other technology and growth stocks in general. So he kind of, we treat them kind of like in like kind of like a gray area a little bit. That's sort of how we look at it.
The GPUs, the leaders like NVIDIA, I contend, are not cyclical. It's the CPU semiconductors that are cyclical. The demand for GPU is so high. And that's why I want to own that. So like I mentioned Samsung, the issue with Samsung is that they aren't fully levered to GPU, and neither is Micron, right? NVIDIA is fully levered to GPU. And NVIDIA, I believe, is still underpriced, and people don't own enough of it. We're long NVIDIA, Meta, Google within the Max 7 name. Goldman has $1,000 price target on this, which is like 3% from here. They came up with that price target after the NVIDIA. Like, what are they? They've been so wrong on this stock. Their price targets are like 2 points ahead of where the thing is. It's like, it's going to blow past the $1,000 price target by year end.
People just have this natural tendency to go, it can't keep going. This can't keep going on. It can't keep going higher.
That's what it is.
It's like a disbelief all the way.
Again, if it's not cyclical, here's what we think. If we all remember and we're old enough to remember the Micron days when it would explode and implode regularly because it was the CPUs are cyclical, right? So earnings would peak and everybody would rush in And that was peak earnings. And if Ram is correct, and he is, because GPUs is a different form of compute, right? Your computer is different than it was before, right? It's just, I'm not a geek, but I understand that thing. It's thinking. So it's no longer a machine, right? It's like fucking exponentially different. So if that is the case, everybody shorting Nvidia saying it's peak earnings are getting hammered because it's not a cyclical company. Now, of course, there are going to be misses, but right now it's breaking the mold of cyclical. So there's people that are short it keep having to cover it, and that's just fuel. But the earnings are matching the growth. Again, luckily I own the QQQ. I don't have the nerve to talk as well, to own as well as I talk about these things, but I am on the board of that with Michael Parekh and Ram and Gerstner, that the GPU is different than the CPU, and that is the big differentiator here. Next one, Phil, what do we got next?
Next up, another opportunity to talk with JC and Ram at the same time, this rotation into energy and commodities. And what we're seeing here, JC, why don't you set us up from a price point of view, this XLE chart that you have, looking at the XLE versus XLK.
Yep. So you're looking at energy, the stocks themselves, which have been, serial underperformers for quite some time. That started to change after COVID. We got a little bit of a correction in that trend. And now we're seeing sort of the resurgence in these stocks. Remember, the XLE is the energy stocks index. It's still below the 2008 highs. So think about that. So this is a 15, 16-year base in the makings. So we want to look for relative strength in the same way that, we've been taking advantage of Apple going down every day because we saw, partly because we saw the relative strength rolling over. This is the opposite. We're seeing relative strength going into energy, right? So here's energy making new highs relative to technology, continuing to make new highs relative to consumer discretionary. These are not things we were seeing last year, right? These are things we're seeing this year, which is another example of why 24 is a different year than 23. There are different things working. It's more of a commodity story, more of a cyclical story as you're getting some rotation out of some of these other areas. You keep seeing it again and again and again. You could, by the way, and it's not just like one chart, right? Like if you scroll down there, what you're going to see is you're going to see energy relative to the rest of the market. And I love this pattern because it's one of those like not a top patterns, right? Can you see that? So this is energy relative to the rest of the market. And, technical analysis books, chapter 2, will tell you this is a head and shoulders top. This is a massive top. But in my experience, asset prices trend. So there's a much higher likelihood that the trend is going to resume, which is what started after COVID of energy stocks outperforming. This has just been corrective action within that ongoing uptrend. And that's when you get the ripper. We just saw the same pattern working in Disney looking to potentially, finish atop, and then you're getting a 50% ripper, new 52-week highs. I think that's exactly what happens here in energy, by the way. And look at energy small caps relative to the rest of small caps, also putting a nice little base. I think there's a commodity story here to stay. And by the way, interest rates keep going up. So for all this thing about interest rates going down, I'm seeing the exact opposite.
This is why I asked Ram. Ram had a tweet last week about talking about XLE, and this is what set this, we've had a lot of discussion about CPU, GPU, Apple, blah, 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 but this is the meat of what I wanted to get to this week. It'll bore most people because it's not tech. But what JC just said is key. It sounds like, JC, you're saying that we probably need to see a little more strength in energy versus the S&P to get really bullish. So I guess we're not full tilt energy yet, but all the signs are there, right? XLE has 20,000 followers on StockTwits compared to every other ETF, which has hundreds of thousands of followers. Probably people couldn't name 3 stocks in the XLE, but they can name 17 EV stocks.
I'll give you 3.
And
I'll give you 3 good ones.
No, but you know what I'm saying? Like, they can name 17 SPACs and 25 meme coins, but they can't name 3 energy stocks. So those are the things that create fuel for a rally that no one believes in? Go ahead.
Well, a few things. First off, on the fundamentals, the world needs more energy. The transition to all electric and ESG and EV, it's not working fast enough. Nuclear is not coming online quick enough. Renewables aren't working. So we need old energy. That's one. Two, we're in a positive period of energy seasonality now through the summertime. Three, energy stocks are cheap and they're growing cash flow. They got clean balance sheets and they're great diversifiers for tech. They and mid caps are leading year to date. When tech goes down, energy often will go up. So it's a wonderful diversifier. Energy are the new bonds. Why? I don't know why people own bonds because of inflation and rates going higher.
Energy is the new bonds. It's a new 60-40.
Energy is a new 60. So I own an 8 to 9% weight on energy versus the S&P at a 3% weight. And then within energy, by the way, there's a larger commodity super cycle that overlays on this. So that uranium's a part of that too. We bought uranium last week. Uranium was cheap. Okay. Now within energy, the only name that's cheap right now, which we like, is Petrobras, PBR, alpha drop right there. I also like Marathon Petroleum. I like Halliburton. Now, both those two are all-time high racing. And I'm less of a guy that chases. Like we were buying
Which
energy
ones
in
at
December.
all-time highs?
And Marathon Petroleum and Halliburton. Or there are 52-week highs.
Yeah, no, Marathon Petroleum is. Halliburton's nowhere near.
Nowhere near? Okay, yeah. So I think hyper tactically, like wait for a pullback. In fact, there's one taking place today. We actually sold off a bit of Halliburton this morning. So it's one of those things where it's time frame related. These are good businesses. And PE for the energy sector is like 9.5. So if you think about like where that new money is trying to find a home that missed the rally, they're looking at categories like energy.
And I'll broaden that out, like you said, to a bigger commodity story. When you talk about like energy being the new bonds and doing a 60-40 with energy, I would argue maybe you could probably do that with commodities, right? So 60-40 being stocks, commodities versus bonds, not just energy. And I got a funny one for you, Pearl Dog. Go to the cocoa futures just because, it's hilarious. And then we'll get into to the soybean quickly. So this is the cocoa futures obviously exploding. And you can see the cocoa ETF that I feel like I used to be the only person that looked at it, but I did look at it from early on in my career. It was around since 2010, 2011, maybe even earlier than that. It was around for a long time. Ticker symbol NIB. Look at when they delisted that thing, Pearl Dog. Come on.
So this is just one example. What's going on here? Like, is there any underlying thing? Is this a weather thing?
Well, no. I mean, I think it's a commodities thing, actually. And I think smart money's doing it. Look at soybeans. Look at soybean. The commercial hedgers have record net long positions in soybean futures, record net long positions in soybean meal, highest long position since 2018 for bean oil. So the smart money is really stepping in here. This pullback in soybeans back to support. There's a soybean ETF, SOYB, and I think you're above those former lows. I say, why not? Take a shot. Commercial hedgers really buying very aggressively here. You can own the futures is obviously the better way. But for people that trade the ETFs, if you're above 24, 25, yeah, sure.
JC, so one behavioral thing here, and Howard alluded to this just 5 minutes ago. Tech is sexy. Tech has a story. AI is so fascinating and interesting. These companies are boring, relatively, at least to our ears, to our story ears. And they are dirty. And all they do is one thing over and over again, and they just generate cash. And so from an investor's point of view, now is a time perhaps. And also JC's been talking about this for 6 months at least. And I recall a program that we had, because I bought a little bit of the XLE on your comments probably 6 months ago. These cycles go on for a long period of time. Is that correct?
That's why you like that, Perlman, because these are long cycles. Because this isn't like a, Johnny come lately. Like you're not flipping meme coins right now, but you're thinking long-term commodity cycle, like that's up your alley.
Well, you said that, and you also said something about the percentage of these stocks in the large indices. And so my thought was, well, I have to get involved somehow to counterbalance that imbalance in the, how much of it's in the indices. That's really all I was thinking.
Good on you, Perlman. Good on you, because the things that you own, that you've told me you own, from what I can tell, is probably more leaning tech, leaning growth, leaning American, right? So if you're going to get exposure into commodities, it ain't going to be through those things.
And if you want to get more sexy about it, and you want to get more sort of individualized about it, Ram, you're talking about PBR. You're talking about slob. Do they still call it slob? Like that's what they used to call it back in the day.
Yeah, by the way, I think the time to be really excited about energy was in December when it was on sale. Now again, we'll get this tactical pullback. I think home build is actually more exciting than energy.
What's going on there? That goes against this idea of higher interest rates, or it's just a shortage. It's just supply based.
Fun fact, home builders, I can name you a few, have had 100% return in the last 12 months. People don't think about that. Okay. David Einhorn's hedge fund is crushing the S&P because its number one position is in a home builder. And there's a housing shortage. And we got 5 million plus or minus 2 million illegal immigrants that need more housing as well. And look, housing, you need housing. What's going to do well when AI proliferates? Land. And home builders own land also, and land is high beta. And these home builders generate earnings, and they're cheap. The PE ratios, again, are around like 10. So there are a lot of stocks that can do really well that are not tech, like Build-A-Bear. No, something about Build-A-Bear is up 30% year to date. The PE ratio is 8.3. They're buying back their stock, and they're just throwing off cash flow, right? So they're Crocs. Remember Crocs? Those things we put on our shoes. That's also up double digits. PE was in the 7s. So value stocks can do well, and people are not focusing on that because tech is what gets written about, and you want to lead the market. If you focus on what the market's talking about right now, you're going to be overpaying on average. Not all the time, but on average, right? I think Nvidia will still do well because people are afraid of it. For example, I think Google has done well. We bought it about a month ago. But home builders are great.
That's some good points there. All very good behavioral too.
Howie, I got one for you. And this goes to this idea that we've been hitting on more and more of popularity and price, which is just an incredibly powerful concept where you have stocks that are performing well, but are not garnering a great amount of interest, at least not yet. Latest pick coming out of the Price and Popularity blog this past week, Astera Labs. Maybe talk about that.
Well, I think the thing about, you can now, subscribe. We have a free, Riley helped create this Trends with No, we're rebranding it to Trends with No Friends. So just hit me up. We'll put it in the notes. Every day we kind of create a list of 52-week highs and lows with stocks that have the least amount of followers on StockTwits. So the idea is, to find stocks with high price relative strength that have very low social relative strength, because that is, like the Peter Lynch, it's just an updated kind of side look at what Peter Lynch used to say by, walking the malls, right? You can't walk the malls anymore and decipher America, right? Like people are mobile now, and you have to see what they're doing on their phones. You have to see what they're paying attention to, not just by their feet, because they don't drive to the mall and do what they used to do. So there is a lot of biotech. What Ram said, there's housing. The other thing that Ram forgot about housing to say, but he's right, because we had Steve Hilton from Meritage Homes speak at our LP event last year. They still remember 2008. That they remember death, right? And when you have industries that are near death, even 20 years later, the management remembers what their balance sheets looked like in 2008. So they are better prepared And maybe they'd be doing better if they were more leveraged. And we know what they're going to do. They'll eventually lever themselves up like everything, every cycle. But like home builders, energy, small caps, certain select biotechs that'll benefit from AI, and select tech stocks, of course, because they're just so pervasive in our economy, are the ones performing. It's this consensus stuff that gets you in trouble. I think which one
have doubled in the last a bunch of them have doubled in the last 6 weeks, by the way. It's
no shortage of oldsters.
Demographics. Yeah. Exactly. It's the fastest growing demographic in the world. And
the other thing I want to...
Yeah, small excited. Go ahead,
Yeah, so sleep, obviously a huge category. The one that I want to talk about too, Phil, is it can go against you. So we saw this week the delisting of Fisker, right? This goes to this idea that, oil is going to work in a world that, the only real standing EV company right now that's successful is, NIO in China, but I don't know the financials, but Tesla, right? We can see how the market likes Tesla right now, not very much. So in a world where EV wasn't working, even a better indicator, again, I don't trade this, but a better indicator of stocks with strong relative strength and weak social followings are stocks in massive downtrends with huge amount of followers, right? So one thing, it's important to find winners, but it's also as important that your portfolio stays out of guaranteed losers. And there's one pattern that has persisted over 20 years on stock twits, which are companies that are overloved and overfollowed, right? Everybody owns them and they're in a downtrend. And guess what happens to people? It's like deer in the headlight. And I saw this in Fisker and a bunch of the other EV companies where if you would go to the stream and just even mention, the financials or mention like the cars being shipped, you would be attacked. Right? It became you could see the shape of the shareholder base by the vitriol that the shareholder base, even though it was a slice of the shareholder base. And so one thing that investors should look out for more than trying to pick winning stocks, because you can ETF your way to owning momentum and winning stocks, is try and make sure you stay away from the obvious losers. And by that, I mean, everybody could easily check their stocks against a stock twits kind of message boards and see a downtrend visually, and then see the discussion that's happening in a stock that's downtrending. It can really separate people that understand why they own something versus people that hope something happens. And Fisker is one of the latest of hundreds of stocks over the years that have been on stock twits and have been chirped and chirped and chirped. And you're not welcome to have a reasonable opinion on helping people. And what I do then is just stay away. But, for the last 15 points in Fisker, it was just like watching, a death sentence. And to see people hanging on to these things is really, really a lesson that people really need to avoid. So if you invest for a living, you're going to catch winners, right? That is the American markets at work. Profits, American companies are forced to think about profits, which leads to upside expectancy. But if you're messing around with unprofitable companies in unprofitable sectors and unproven sectors, be very careful of, riding a stock down to zero. And kind of those patterns exist. And you just got to know what to look out for. And that's kind of why we started Trends with No Friends.
Yeah, look, we're just real briefly. No, I agree. Look, the more vitriol I get on responses on Twitter, like SoFi is a good example. I was attacked for shorting SoFi, which by the way is down like 25, 30%. But the more, like to your point, it's crowded and it's owned, which means no one's left to buy. And these stocks break. It's not when bears beat the bulls. It's when bulls become bears. That's what happens. And there's so many people that own this thing, and then it's not performing the way they want, and then they start to sell. So yeah, I agree. Look, this was the idea behind non-consensus investing. You want to be leading the market, not following the market. You don't want to be chasing the latest fad. And there are a lot of stocks out there that have those traits, like Palantir is massively overvalued. It's got a huge following on Twitter. Yes, it's got an AI theme, but aren't there better AI plays that are cheaper? Again, like Nvidia? Why wouldn't I own that? Palantir is spending money on Nvidia.
Tesla has 1 million followers on
point.
StockTwits, and Palantir has 250,000. By contrast, Ram, you might like this one. Constellation Energy has less than 1,000 followers on Twitter. It's got like 800 followers, and all this thing does is go up.
I like that.
Great one.
Yeah. So
I like that. It's a great indicator.
Howie, Astera,
very
Labs just
interesting
went
indicator.
public, 1,000 followers on StockTwits.
Yeah, I can't comment on the fundamentals. I would just say that people, if they want to pick stocks, right, you can follow, there's Factor Investing, there's Koifin, there's FinChat.io, there's people like Ram out there sharing ideas. Try and get your money in high relative strength stocks. But if you want to do stuff on your own, and play around with strategies within high relative strength, use our list that we created. Start following it for 3 months. You don't have to do something the first day. This is where the Australis Labs start showing up in the Constellation Energy. Start getting used, and you will start seeing pattern recognition of industries that are going to start being talked about more. But yes, you want strong relative strength. But I think all things being equal, you want companies that aren't being talked about on top of that price relative strength. So it's not just about any one company. It's about a process of how you do work and about finding things that are moving in the right direction that few people quite understand. And you only need one of those in your life. Listen, it happened with Apple. When Apple was overfollowed and doing poorly, it took a complete new product, and that became the thing for your music, and the white
iPod,
headband,
right.
The iPod, and the white headbands. And when you started seeing those white headbands, and while people were working out and going to the Apple store, no one liked the Apple store. No one thought that the iPod was anything more than a fad. Unlike the Apple Vision Pro, which Apple's shoving down your throats and can't sell one, the iPod was being made fun of because of, how many songs you could store. And then the buds, the earbuds with the dangles were like being made fun of because you were like part of some like hipster mob for wearing the Air. But that was the beginning of a trend, strong relative price strength. And people misunderstood the Apple Store, and people misunderstood the iPod, which eventually became the iPhone. So I think, you got to go back in history to do these things, and looking at lists, very simple lists like we've created, are the way to uncover big winners. But anyways, so that's my 2 cents.
Last word for today, pal.
I like home builders. Here's one, MHO, bought it last week. Home builders are, again, tactically overbought right now, so wait for a good entry. But MHO did a 100% return last year. It's MI Homes. The reason I point that out, I don't expect that to happen next year. I expect good returns. But the point is, again, you can have sectors that do very well if you have a good valuation, because the primary driver of returns in the stock market is multiple expansion. The second driver of returns is earnings growth. Ideally, you get both and you get momentum, Howie's point. That's called momentum, quality, and value, right? Value means cheap, it's going up faster than the others, and it's a quality business. If you can find those three together, you got a home run. But yeah, look, I think home builders are quite interesting. I think tech is expensive. There's some leadership rotation to other areas. In small caps, we're focused on ways to benefit from the growth of the oldest of the oldest. Like I mentioned, nursing homes. There are nursing homes, I'll find a ticker for you if you want, that have done a doubling just in the last 6 weeks. And we're investing in a small cap that's doing sleep apnea services for the elderly.
What is that? What's that ticker?
I'm pretty sure sleep apnea. I gotta pull up the ticker for you, but the point is there are a lot of assisted living. Because the
sleep apnea is also an obesity play.
There's so many needs the elderly have, right? At home infusion therapy, at home oxygen assistance, many plays just around that elderly. Again, I mentioned Harrow is a good one, right? Cataracts. I want to be long cataracts. How do I get long cataracts? Well, I'm going to invest in the company that provides an analgesic that is an eye drop that doesn't require having an injection in your eyeball. Sell painkillers, right?
He's right. This is going to be a whole different market, and part of the money transition, not just to our kids, is going to be taking care of our older parents. And I take care of my mom. It's close to $10,000 a month to take care of an elderly person. If on the cheap end, maybe you're at $3,000 to $5,000 a month if you have to take care of an elderly parent. But it's if you want to take care of them in any kind of style that they're used to being taken care of, you're at $10,000 to $20,000 a month. And that is found money to these nursing homes. It's a supply-demand issue more than it is anything. And people will spend, like on their puppy, for their parents, a quality of life.
They will spend.
Yeah, they will spend.
You nailed it. That's the key thing. They'll spend on their parents, and the parents will spend on themselves because they are living longer and they still have the funds.
Yeah, probably the best early stage stuff that you could look at. Again, it's not sexy because it's, hard to build. Obviously selling goods into elderly is easier than building nursing homes into elderly. So the mechanics work differently, but we're very undersupplied. Even in Scottsdale, there's like one or two places for the Jewish older crowd to go to, and they're 5-year waiting lists for people to get in. So that's going to change over the next 10 years. So we'll probably have some tickers here over the next few weeks. Okay, Bill.
Okay, thanks, we're going to wrap it up. Ram, thank you so much. I'm already looking forward to having you back again because these themes are just huge themes, and you just dig right in. You give us trading ideas. It's investment ideas, and you back it up with the rationale. So just much love to you, brother.
Thank you. Really appreciate it. Always a pleasure.